Hey everybody. Uh, I'm going to talk a little bit about my understanding of the monetary and banking system here in Canada and in the US as well. So in the United States in 1971, before 1971 there was a what they call a gold standard, and what that means is I believe it was 20% of the US dollar was backed in gold, which means that for every dollar that was out there in the supply, in the money supply, the US central bank, the Federal Reserve, had to hold 20% of the equivalent in gold. So that existed, I believe, after the Second World War up to 1971. At that time, Richard Nixon was the president, and he did away with that. He took the U.S. off of that gold standard, and he made an agreement with Saudi Arabia that they would start to sell their oil in U.S. dollars. And in return for that, they would get military protection, and the United States would sell them arms and that kind of stuff. So that's why there's this kind of shady underlying agreement with Saudi Arabia. Soon after that, all the OPEC countries start to fall in line, so that now, if you wanted to get oil, if you wanted to purchase oil, you need to have U.S. dollars. So if you're a European country or an Asian country and you want oil, you need to acquire U.S. dollars. So you could imagine what that did for the supply of the U.S. dollar. It just blew it up. It made it expand at a huge amount. And now that they were not on the gold standard anymore, where they had to hold a certain amount of gold against the dollar, that wasn't the case anymore. They could just expand it as much as they want. So that's how the U.S. dollar really became the world reserve currency, and really created this financial global hegemony for the United States dollar. In Canada, our central bank was created in 1935 to help against the Great Depression at the time. So what the Bank of Canada, our central bank, would do is, incidentally, the U.S. central bank, the Federal Reserve, is a private central bank, which most of the central banks around the world are. Our Canadian central bank, the Bank of Canada, is a public central bank, meaning it's owned by the government, it's owned by the people. So created in 1935, what they would do is issue interest-free loans to the government, and what they did was various infrastructure projects like the St. Lawrence Seaway, the Trans-Canada Highway, the railroads. So they would loan that money to the government, zero interest. The government would eventually pay them back, without interest. So that went along from 1935 until 1973. I believe at the time the Canadian national debt was maybe $80 billion. So in 1973, Pierre Elliott Trudeau, who was our current Prime Minister's father, changed the system. So now we wouldn't borrow at 0% at interest-free from the central bank. The government would borrow from the private banks, RBC, TD, Scotia, etc., at interest. So you can imagine what that did to our national debt. If before you're borrowing money from the people at 0%, versus now you're borrowing from private banks who are making money off the interest now that they're charging, you can imagine what happened to the national debt. It skyrocketed, of course. So in 1973, 80 billion. Now in 2017, we're at $1.5 trillion. So that's where we are with with our Canadian national debt. Now, both currencies, the U.S. dollar, Canadian dollar, incidentally, all the currencies around the world are what they call fiat currency. And what that is it it means it's just paper money. It's not backed by a commodity. It's not backed by gold. It's essentially paper. It's worth nothing. It only exists through the confidence that the people have in the currency. So, in the U.S., they have what is called fractional reserve banking. Now, what that means is the banks are required legally to hold a certain amount of money against loans that they loan out. So their reserves that they have to have is only a fraction of the loans that they loan out. And in the U.S., it's 10%. So what that means is they can loan out, if they have $100 in their bank account, they can loan out $1,000. And the remaining 90% that they loan out, it's just created out of thin air. It just becomes money as it's created on your in your bank account. So in Canada, it's 0%. So we have a 0% fractional reserve standard, meaning the government, or excuse me, the bank doesn't have to have any money against the loan that they give you. So when you go get a car loan or a business loan or whatever, any kind of loan, they give you that money. They don't have to have that money. And in fact, they don't have that money. What they're doing is they're just creating an entry in their records and in your bank account that now the money's in your bank account and now you owe us back that money at interest. So we've created a system now where the government's borrowing from the private banks at interest. The public's borrowing from the private bank at interest. And if you don't have to have the money to loan out, then how do you ever get the money? How is there ever enough money in the system to pay back all the money that's owed? And that's where we are right now. We're at a place where we owe $1.5 trillion on a national level. The Bank for International Settlements in Switzerland came out a few weeks ago, maybe a month now, and said that Canada is on the edge, on the verge of a housing crash, namely because of the debt ratios that we hold. They cited a 17% debt to GDP ratio in Canada, meaning that our government is owing 17% more per year than what we produce. And on a household level, our debt to disposable income is 167%. So we owe a lot more than what we're capable of paying back on a personal level and at a national level. So how does the government get money to do anything if we owe all this money? Well, they can just borrow. They can just keep borrowing. So they borrow money, which is essentially printing money. They print money into existence at interest, and that drives up the debt for people and for the government. So again, how is there enough money in the system to pay all the interest back? The answer is there isn't. It's a Ponzi scheme. So at some point, our government's going to have to come to face the fact that our currency is not worth anything. It's worthless. Now, what you would typically measure a currency against to get its value, currently they measure currencies against other currencies, but because all the other currencies are employing similar strategies where it's a debt-based currency, it doesn't do us any good to compare currencies to each other that are doing the same thing. So what you want to have is something else to compare against, something real like gold and silver, and that's typically been what you measure currencies against to get their real hard value. Now, the gold and silver markets are manipulated. So what they're doing in the silver market in particular is they're flooding the market with artificial supply. So how are they doing that? So the silver markets are, there are twice the annual production of silver, 2 times the annual production of silver trading every day in the silver market. So there, I believe, was like 400 million ounces or something produced of silver last year, and twice that's being traded around every single day on the exchanges. So what they're doing is they're taking an ounce of silver and they're selling it to to this person, and then they're selling the same ounce to this person, to this person, to this person, to this person, and through those gold and silver markets, same thing's happening with gold. Through those gold and silver markets, you don't actually get the physical gold or the physical silver. When you purchase it, you get a piece of paper saying you have the right to it. So if they don't have to actually give out the physical product, they just sell the same ounce of gold or silver to anybody. And that's how they artificially drum up the supply of gold and silver. So what happens when there's an artificial supply in the system? Well, it brings the price down, right? The more supply there is, the cheaper the price is. So they're doing that to protect the entire global monetary system from being found out. Because if people knew the actual value of the US dollar or the Canadian dollar, they'd run for the hills. Incidentally, you can go onto the U.S. Federal Reserve website or the debt clock website, where they tell you how much the U.S. is in debt, and there's a section down there that talks about the gold ratio and the silver ratio, and that what they're doing is they're taking into account the money supply of U.S. dollars out there in the system and the production of gold and silver out there in the system, and they come up with a price for what it should be. Now, the silver price, according to the Federal Reserve on that website, should be $871 the last time I looked. Well, right now it's trading for $18.50. So that's how much it's depressed. Silver is depressed in the market. Gold is, I believe, is about 8,000 on that website, and it's trading for about $1,290 right now. So both markets are suppressed by the artificial supply to protect against the fact that the fiat currencies out there, including the US and Canadian dollar, are worthless, are not worth anything. And that it's a debt-based currency, meaning the more you produce of it, the more you owe it back. So at some point, that's not going to work anymore, right? The more you produce, the currency, the less it's going to be worth, and that's not fair to anyone. So that's where we are according to my understanding of it. It's a situation where you're digging a hole. The more you dig the hole, the more you're getting into trouble, and the more you get into trouble, the more they're trying to dig the hole to get themselves out. So printing more money, borrowing more money is not the answer. We're going to have to face facts here at some point that the monetary system, the banking system, is deeply flawed, and they're covering up for the fact that it's flawed. And when that happens, it's going to be a difficult situation. So again, that's my understanding of it. And if you've got any thoughts or comments about it, please leave them for me. And thanks for your time. Talk to you later.